Okay, so what kind of situation do we currently have on US oil? Now, let's start our analysis from the weekly time frame. Now, on the weekly, what we can see that the market has created this W formation and currently is doing exactly what we wanted to do. So, creating a deceleration from this extremely strong move to the upside. So, a distribution phase before a retracement. Now, what we can also notice, however, is that the market still hasn't tested the previous support here from a monthly perspective. In fact, we know that here on the monthly, we have very strong resistance, okay? And let me be precise, and we know that the market still hasn't tested this zone. And we also know that on the monthly, the market had created this very strong move to the downside, and this is a retracement. So if we want to measure the retracement, what are we supposed to be doing? Taking our Fibonacci from the height below of the impulse. And we can see that the market, why it is creating the deceleration exactly here. Because this is the 0.618 of the Fibonacci taken on the monthly impulse. So is the golden ratio of the monthly impulse. So definitely a very strong resistance area. So maximum, we can expect a spike to the upside. And if the market wants to respect the golden ratio, is supposed to make the move to the downside from here, creating a monthly close below this zone that we have just seen. It is the golden ratio. But obviously for a monthly close, since the monthly candle has just opened, we have a lot of time. So we can definitely also create a big spike to the upside and then start the real retracement, which is definitely a possibility for one single reason. If we take our Fibonacci from the low to the high of the impulse, you can see that the market, the 0.382 is not lining up with the market structure here. So we can expect a move more to the upside, so to the upper zone of the resistance, so that the 0.382 will actually line up with structure. And most of the times, Fibonacci levels are supposed to be lining up with structure. But why is this not a problem? Why we can just simplify this full situation without breaking our heads too much? Because very simply, guys, trading is reactive and not predictive. And until the structure on the daily time frame will remain bullish as it is right now, there is simply no opportunity to be looking for any shorts. Now, where is the structure at the moment? The structure is here. Okay, the market has clearly shown a reaction to this area, so acting as resistance. And this zone is now acting as support. The previous structure was here with this red candle, so previous resistance now turns support, and now we have the resistance here, which is now turned support at this area. So until this zone will be holding as support, we only expect continuation to the upside, and we will not be looking for any longs nor shorts because we don't have good probabilities on either side because the time frames are not aligned. However, if we will see the market break this structure to the downside, then everything will combine. Okay, and I will now show you exactly how we will be approaching that situation with students. Now, before we do that, let's go and give a quick check at what we have from a CAD perspective, because as you know, the oil correlates pretty well with CAD. We can see that from a net position perspective, hedge funds currently are sitting at minus 20K net positions with 43K shorts on the CAD and 22K longs from the minus 35K that we had here. So definitely an increase in the net positions on the CAD. And we see a lot of shorts getting close with the last report. However, we still have the new report that has to come out today. And we know that on the weekly, we are overextended with a deceleration. So we still have the possibility to break below this area. So how we will be approaching this? As usual, being reactive and not predictive. If the market will break the structure, then this structure will be turned resistance. And after the previous support will be turned resistance, at that point, after the market creates a retracement, we will be monitoring price action with students on the 4-hour time frame, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside to the weekly target, so to the neckline, the previous resistance now turned support, for this nice move to the downside with a huge risk to reward. But first, we need to see a break of structure. Until we will see a clear break of structure, there is no opportunity to be looking for any shorts. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.